looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my fellow traders, my futures family. It's good to see you all again. Happy Synthetic Tuesday. It is May the 30th. Again, Synthetic Monday, really, because I know I wasn't trading yesterday. I hope you weren't either. It seems like a month since the last time I sat with all of you, but we've got 4 days of opportunities ahead of us, and we're going to take a good look at what we've got going on. Yesterday, being a holiday, it's a non-settlement day. It always kind of freaks me out because there's no settlement from yesterday. We're still looking at the settlement levels from Friday. Most of these markets had very little to no volume. So how much information do we really get to take from what we put into these markets yesterday? We're going to take a look at that in the charts here very shortly. I always just have to remember that on non-settlement days, days after non-settlement days, things are a little bit confusing. If you ask me, that's just me, right? I mean, maybe it doesn't affect everybody, but it's something that I do want to point out. As far as economic numbers this morning at 7:30, we had the Case-Shiller and FHFA home price indices. 9 o'clock, we have consumer confidence, 9:30, the Dallas Fed. And at for lunch, one of the talking Feds, barking, will be barking. As far as what we're looking at for the rest of the week, mortgage applications tomorrow morning, as usual. We've got a couple of talking Feds through the day. We have the job opens labor turnover survey at 9 o'clock tomorrow. That may be something that might be impactful. We also know that we have the beige book tomorrow at 1 p.m. Central Time. That's the shot across the bow that it's 2 weeks to the next Fed meeting. What are they going to do? As far as Thursday's concerned, we've got a lot of information later on in the week about employment. These are going to be important numbers, even with the whole debt ceiling situation going on. So we've got the ADP employment report on Thursday, jobless claims as usual on Thursday, productivity and cost, PMI manufacturing, ISM manufacturing at 9 o'clock on Thursday, possibly impactful. Construction spending also at 9 o'clock on Thursday. We have the EIA natural gas report at 9:30, and then the petroleum status report at 10 o'clock. All of that on Thursday. Because of the holiday on Monday, they usually push that Wednesday petroleum status report off till Thursday. For Friday, only one major on the schedule, and that's the unemployment numbers, the employment situation, non-farm payrolls. So we've got, I think, increasingly important information as the week goes on and as the negotiations continue for the debt ceiling situation. U.S. equities, just going to double check here, and yes, largely higher. The Dow just a little bit lower, but we've got the NASDAQ up 1.3% already this morning. U.S. equities begin the short week mostly higher, of course, led by tech and the NASDAQ, as NVIDIA and the A stocks have really been boosting the index. Investors also smile at the debt ceiling deal, but it is facing its first hurdle today, and that is going to the House Rules Committee. Still a lot of hurdles for that, but at least it seems like there's a little bit of progress, and investors and traders alike seem to be cheering that. Crude prices falter here on the specter of further rate hikes being, increasingly possible, and slowing economic growth, of course. The VIX this morning is down about 5%. It's at 1708 last I checked. On Friday, it was 1877 at this time. The dollar index also coming off those recent highs above 104. It's down at 103.92 last I checked. It was 103.8 this time on Friday. And the yield on the 10-year lower this morning, 3.72%, slightly lower. It was 3.84% at this time on Friday. As always, make sure you hit the lucky like button, share, comment, question, feedback. Heckling and love are always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. I got to say good morning to everybody. Pete, yes, first in the room. You win the prize this morning, Pete. Steven, good to see you this morning. Bear goes long. Lacey says good morning to everybody as well. Steven, Theo, good to see you again. Scott saw and you conquered. Congratulations. You succeeded in the trading combine last Friday. We're looking forward to seeing your continued success. That's awesome news, Scott. Thank you so much for sharing that. I always love to hear about successes from my futures family. Happy Synthetic Monday to you, Shaw, as well. No Starlink just yet. We're going to be working on that as we keep moving along here. Hopefully things will continue to stay stable. Haven't had any problems since the problem we had last week. So hopefully we're going to be able to maintain internet connection here for the time being. Alejandro, good morning. Timothy, Brian, Rooster, good morning. Taurus Trader, Barry, Haggle Matters, good morning to you. Matthew, good morning. George, the center of the universe, says good morning to you as well. Chat, Bill Phillips, Charles March, good to see you. Chad, Anthony, Robert Harrison, good to see you this morning. Henry Nostik, folks are saying congratulations to Scott Saw and he conquered. Don Clemens, good morning. Will, his spidey senses are saying beware of a big pullback. Good morning, Vince. Jason, Kyle, Dr. VJ, dude. George Duque, good morning. Jorge, good morning. Anissa, Brody, good morning. Travis, good morning. Shy, Sarah Hall, prayers and love to you as well. My spirit animal, Rusty Golfer, is with us. Andy Bleed, John, good morning. Travis, holiday trading is like overnight, right? Light volume, need more to confirm. I just don't even trade them. Good morning, my brother Thomas. Good to see you. I love you and I miss you. Grounds Hero, Jason, good morning. JT, good morning. Joe, Joe's word for the day is calm. I like that. Ryan, good morning. He's having more success with gold lately than the equities. Nice. Audio is quite bad. Are you sure you're going through that micro? Thank you for that feedback. I'm hoping that the audio is pretty good. Is it too low, too high, breaking up? Not really sure. Thank you, Taurus. Orion, good to see you. We'll work on that audio cost. Hello, James. Yes, Tom says the lucky like button. It's the stash. Good morning. Thank you, Shaw. Thank you, Scott, for commenting on that. That's really the goal here. Is we are looking forward to everybody's success. Good audio on your end. Audio is strange. Audio is strange when you're a stranger. Here's fine. You sound far away. Maybe if I put this a little bit closer, but for the most part here, it seems to be doing okay. Audio is fine. All right, folks. Audio okay here. Thank you. Good for you, Rusty. Okay. All right. Maybe there's something going on in the local issue somewhere here, but I think we're doing pretty good. So we're going to jump into the charts now. We're going to take a look here at the S&Ps on the daily chart. All right, I think we have we have moved. All right, I got to get used to this a little bit. We are using that different system here, so we're going to see how this plays out. All right, here's the S&Ps. Yesterday, we opened with a gap. We closed the gap, a very low volume. Of course, everything closed at noon, so we could have the day off. Friday, this big move up didn't do all that great as far as volume is concerned, but that doesn't concern me for days, for up days. The market equities, they tend to bring volume on the down days. So we had an increase in open interest on Friday of 4,500 contracts. That's pretty good. I mean, we are coming into rollover, and the vast majority of that open interest came into the front month anyway. So that tells me there's new business that came into this market, and now it looks to be trying to extend above last week's high. This is a different picture than the NASDAQ. Of course, I'm sure we're all well aware of that. The S&Ps seem to be struggling to break out of an area of balance where the NASDAQ has been basically one time framing higher for a while. So last week's high is going to be somewhat pivotal. It's already been pivotal this week. Yesterday, it kind of held the low. Last night, it kind of held the low. Debt ceiling news, it's going to be very sensitive to that. All these markets are going to be. It is really the focus that that investors are kind of leaning on, except of course in the Nasdaq where the tech stocks are killing it. So got to just keep one ear, one eye, one something on the debt ceiling situation. No matter what happens, half of the people that vote for it or don't vote for it, whatever it is, they're not going to be happy with it. And you got to wonder if investors, how that's going to respond when that finally comes to some sort of fruition. They can't let the U.S. default. It's all in the underlying information that what they're giving up, what they're putting in, all of that's going to be digested, and how the markets are going to respond to it is, as always, unknown. Take a look at the 30-minute chart here. So, Friday, big up day. It's a P-shaped profile, which would indicate short covering, but that's not supported by the gain in open interest. So it's short covering meets new longs on Friday. The market opened with a gap. It closed the gap yesterday. And now we're opening with a gap. And I'm not even really using the information from yesterday's session because it doesn't really matter. There's absolutely no volume there. I mean, that's just like an extended overnight session. Settlement, again, is based off of Friday's settlement, 42.13 quarter. We are opening with a gap. We have overnight inventory that's possibly looking to be a little bit long. We opened Monday night here. We opened last night here. So we opened last night here, right here. So it does look like we're a little bit long. We're holding a gap to the upside. So we're going to try and use gap rules. I mean, if we can't close the gap relatively early, we're going to be looking for opportunities for this market to continue this move to the upside. We've got, we don't have far to go before I think we really start to change the market state to the upside here in the S&Ps. I think we've already done that in the NASDAQ. Take a look at the TPO chart here. So here's that P-shaped short covering profile, not supported by a loss in open interest. Instead, an increase in open interest indicates shorts got squeezed and new longs came into this market. Here's the session from yesterday. We're above both of them. We're opening with a gap. That may mean that the market is out of balance and that we maybe need to look for opportunities earlier in the session if we're going to catch the best trade location. Again, if we can't close the gap, and I'm looking at the gap really to Friday's high instead of yesterday's high because there was no volume here as a gap close. So if we can't get this gap closed relatively early, I'll be starting to look for opportunities as the day goes on to find chances on weakness against areas where I can limit risk. I'm looking for some sort of upside structure to establish before I really start to get involved. Now let's take a look at the crude oil, which is just opening up. Here's the daily. We're coming out of rollover. We came out of rollover. It's no longer a factor, but we haven't really moved in almost a month. I mean, we've been in this range bound area for about a month, and there's been some decent opportunities. We're starting to see, a potential breakout below this trend line here. It happened in the overnight, but does this mean we're going to get a good test of weekly kickoff low, which is 70.15? If you remember, the White House said a couple of months ago that they were going to start buying crude to refill the strategic petroleum reserve at 70. Well, we've barely been below that ever since. So I'm going to be looking for opportunities there, but range bound, we do have 1, 2, 3 points of contact on this trend line. We've broken up maybe 4 points of contact on this trend line, and we've broken out below it in the overnight session. Take a look at this on the 30-minute. There that trend line is. So again, opening with a gap. If we can't close the gap, we'll look for opportunities in the direction of the gap, looking for shorts. Weekly kickoff low down around that 70 level. We've got a couple, we've got last week's low down there. We've got a naked point of control that remains unchecked down there. We also have unchecked points of control here. We got the crude now taking a little dive here off the open. It looks like the opening range is the high of the session, and that is one big downside move right off that open. Okay, we were opening with a gap, probably looking for opportunities for shorts. Looks like the opening range was left at the high. I'm not going to be looking for longs until we get near an important inflection level like that 70.15 weekly kickoff level, 70 even, big fat round number. And then we start to build some structure down there. I don't want to step in front of a market that is exhibiting these kind of activities. Did trade right down to last week's low. That does give us the chance to limit risk. Ooh. I kind of reiterating the fact that we don't have, that we're still leaning off of settlement from Friday with the non-settlement day yesterday. It always tends to freak me out. So it does look like our opening range is the low of the session. We had a normal variation day on Friday, a double distribution day yesterday on absolutely no volume. It seems as though with this profile on Friday, the market is seeking new opportunities to facilitate trade. It used up a lot of trade facilitation here. It remained there yesterday. Now we're breaking out to the downside. That opening range trade was probably pretty tasty this morning. I'm hoping somebody got it. NASDAQ. All right, so upside structure, strong and seemingly getting stronger. Friday, we added 11,000 in open interest. Remember, we don't have that information from yesterday because it's a non-settlement day. Look how low the volume was. Already the volume's higher today. So that open interest increase here on this kind of breakout to the upside indicated new business. This market it's getting an A for its health in the upside auction. The market is doing very well. Remember, we're thinking about a market. We're thinking about, well, what is it attempting to do? Well, it's attempting to go higher, and it's doing a pretty good job of it. So I'm giving it an A. But on the caveat on that is the tech bubble had an A as well. I know. I think it was Will was talking about. Being cautious and looking for a pullback, and I think that's a smart way to do things. Make sure you are protected. So here we are. Last week's high, supportive yesterday with no volume, supportive last night, looking like the market's attempting to continue this move to the upside. Here's the day on Friday. Again, it's a P shape, but it's not indicative of short covering, indicative of new business to the upside. Settlement is still down here, 14,332.50. The overnight and yesterday's session supported by last week's high. Interesting. Opening with a gap, overnight inventory long. If we do get a pullback and we can't close the gap, the overnight inventory may offer us the opportunity to get a better, cheaper trade location for longs if they don't get what they're looking for right on the open, right? What are they looking for on the open? They're looking for buyers to come in right off the bell and start pushing price higher. If they don't get it, they may get nervous. They may bail on those positions, giving us a better opportunity for better trade location for longs after they're finished. Here's the TPO chart. So more of a double distribution trend day than a normal variation, but still P-shaped. That's indicative of short covering, but I think if there was short covering, it was also met with new business to the upside. Here's our overnight high, our overnight low, right to the point of control from yesterday's session. And we're going to be opening with a gap. So, the markets are opening out of balance. Out of balance means, well, we may be looking for opportunities earlier in the session. Here's your gold. We're trading August now. August has the higher volume. This is the August contract. And all the levels have been adjusted for the August contract. So, medium time frame structure at risk. What does that mean? Well, we've got 1, 2, 3, 4, now 5 points of contact up against this trend line. To me, that's a pretty solid trend line. The more points of contact, the stronger the trend line. And also, quite possibly, the biggest move once that trend line is broken would be to the upside. Well, we tested last week's low yesterday. We tested between last week's low and weekly kickoff high last night. We were rejected. We're now testing an important inflection level up here. 1, 2, 3 days in balance, upper extreme, lower extreme. Be patient here because I think there may be some bigger opportunities as time goes on. Now we've opened with a gap. We're pulling back. We've got overnight inventory to the long side. The overnight inventory seems to be reconciling back towards the range from yesterday. We've closed the gap from Friday. When you look at the volume here, it actually wasn't all that bad yesterday in gold. So if we're looking for longs, I think we may be able to get some better trade location here. This is a 200 session, I think, on the 30-minute. Doesn't even show it. Well, overnight longs. What about the TPO chart here? And we do have some kind of weaker structure down here near the low on the profiles. This is not a very strong low. I mean, exactness in the market is a weakness. Friday's low was weak. Friday to Thursday's lows were weak. No excess down here. Low excess high yesterday. The market is attempting to push higher. There is the potential for repair from this profile up here. If you remember, we had this big down day, but it wasn't all that confident. In other words, we left anomalies and lots of holes and everything. This isn't a very confident move. So if we accept above this 3-day range, I think this market could really go up and start to repair some of this information. From what day was this? The 24th. Yesterday, normal variation day, week high. Day before, normal variation day, week low. The day before, normal variation day, excess high and low. We've got some weakness down below in this continuation structure. Again, I'll be watching that trend line. Our overnight high, I think, is going to be very, very important for us today. Euro. It's very similar in structure. Okay, it's medium time frame. We've got 1, 2, 3 points of contact, maybe another one here today. So this downside structure is intact, but it's not really necessarily doing all that well. As a matter of fact, in gold on Friday, we lost approximately 12,000 in open interest. Well, we lost open interest in the euro as well, minus 5,700. Now, euro is coming into rollover as well, but that's just not indicative of a healthy downside move. Really, the excess we've left here in today's daily bar. So downside structure is intact. It seems to be at risk. The dollar dipped back below $104 today. Rejection below last week's low, and on the open interest loss from Friday, 30-minute. So here's our overnight low. Not a strong low. That's kind of a weak low. Overnight inventory, we'd say, would probably be a little bit long, and I would say it's largely reconciled now. We're in range and in value from Friday's range. Patience. I'm going to suggest trying to stay patient here. Better trade locations may still come as the day goes on. Here's the TPO chart. So here's that weak low we were looking at. We have a weak overnight low as well. Normal variation, neutral day. Just yesterday was blah. That is, by the way, an industry term. And here we are. We're just kind of hanging in this range here. I'm going to try again and stay patient because we are inside Friday's range and value. Let the market set some extremes, work those extremes to limit risk. Now for the 10-year. 10-year has also rolled. It is now higher volume in the September contract. Look at yesterday. Tested right to last week's low and rejected. We have very even lows here, however. The open interest only lost 6,000 on a roll day. That's kind of inert. No real change. Here's the 30-minute chart. So downside structure now kind of broken to a degree, right? We've got higher highs and higher lows. We have overnight inventory to the long side that's currently being reconciled. It's being evened out. If we get to, if we get near the high from Friday's session and we can't get into it, that's an opportunity for us to limit risk. Again, we do have a little bit of weakness on the low here. And here's the TPO chart. Let's look at that. So that weakness on the low on the daily doesn't show here on the regular trading hour session only TPO charts. We have weak low, excess on the low, range. So the market is starting to put in higher highs and higher lows. Does that mean rates are going lower? Look, where are we in the bigger picture here? We've come off quite a bit. Now let's take a quick look at the nat gas here. Test below weekly kickoff low. We added 7,000 in open interest on Friday, which is here. Nothing really yesterday, of course. We don't even have that information yet. It was a non-settlement day. Now we're checking out the weekly kickoff low, which remains. We're, of course, trading the July contract rollover nearing the end. Here's the 30-minute chart. Look at how this market just kind of barcoded all night last night. And now we're starting to see some possible continuation. I was looking for an opportunity to bounce off this weekly kickoff level to one side or another, but you had to be pretty quick to get this one. What about the TPO chips? So it's kind of foretold, right? We have excess high, low, excess low, weak low. Yesterday doesn't matter. Continuation to the downside. Excess high, weak low, excess high. Profiles have been basically telling us that this market's likely to continue to go lower. So on that note, let's move along and we'll get prepared for Make Hogue Money. So it's always a pleasure to see you all. It's always a pleasure to be with you all. Let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. It's Synthetic Monday. It always freaks me out when there's a non-settlement day, so I'm going to be cautious. I'm going to watch myself, be careful, make sure I protect myself, keep my ears and eyes on the news if there's anything about this debt ceiling deal. Make sure you're prepared, and you are protecting yourself. Always use stop markets. Stop markets are going to get filled. Stop limits may not. So yes, we are going to be doing Make Hogue Money, Alejandro. I'm going to get that ready and running here very shortly. I look forward to seeing you there. Let's see if we can make a little dough. And looks like it's going to be an interesting but a short week. So don't fall into the idea, well, I've only got 4 days this week. I've got to reach that goal, because that'll take you out of your strategy faster than anything, right? If I got to make that goal, I got to make trades. And if I got to make trades, I may not be choosing the right opportunities just to take trades, right? So, well, we'll see you for Make Hogue Money shortly. If I don't, have a great trading day. Probably see you for a reflection here at the end of the day, just to kind of see what happened throughout the day. We do have the coach's playbook here at 11:30. We'll look forward to seeing everybody there, and trade well. Get out there and profit now.